Welcome to Avis Academy. So this is our second video on GST tax liability comparison of regular scheme and composition scheme. So in the first illustration, we have considered the case of manufacturer to the dealer. So here we are considering the case of a person who is running a restaurant, and then we are calculating his tax liability if he is opting for normal scheme and if he is opting for composition scheme, and then we are making a recommendation to him whether he has to go for composition scheme or regular scheme. So let's see the illustration next.
In this illustration, we will be verifying how we can calculate GST payable if a dealer follows a normal scheme and a composition scheme. The illustration is already written on the board. So let's see the illustration and discuss what it contains, and then we will see what exactly we need to calculate. So if you see the screen, the green board, there are few information given. So first, in the first paragraph, they have given Mr. Rohit runs a hotel in Mangalore, and from the following details compute GST liability under normal and composition levy. So Rohit is running a hotel in Mangalore, and they have asked us to calculate GST payable under normal levy and composition levy using the details given. So this is what exactly they have asked. We have to calculate tax liability under normal scheme and under composition scheme together. Next, they have given the total value of inputs is rupees 100 lakh. So Rohit has purchased inputs. Maybe to run his business he need input, right? To run his hotel he need inputs which he has purchased. So if you see here, they have given total value of input. They have not given invoice value of input purchased by him. So when we say invoice value of input, it includes GST component. That value we need first of all. So he is purchasing this input from his supplier, right? So first of all, what we need to do is we need to find out the invoice value for Rohit. This is total value of input given. This does not include GST. So we have to consider that part first. So that we will be doing, and then next. But if you see the input value, it is 100. In the next sentence, they have given the nil rated and exempted inputs constitute 20%. Out of 100 lakh, the total value of input, you can say the cost of input because it does not include GST. Total value of input of 100 lakhs, 20% is nil rated and exempted input. Nothing but nil rated and exempted supplies. Nil rated means zero rated, and exempted means the government has exempted certain products from GST. So that is included. So when we are calculating taxable turnover, or when we are calculating taxable value or value of supply, we generally include nil rated. We generally don't include nil rated and exempted supply, because on that tax is not charged. We are calculating taxable supplies, right? But it includes nil rated and exempted supplies. So since it includes that, we cannot charge tax on entire 100 lakh. We have to exclude this, and on the remaining input we have to charge the GST rate. We don't know for the time being. We will see what is given. Remember that this 20% has to be excluded from 100 lakh to calculate the invoice value of input for Rohit, because these are nil rated and exempted inputs which are included in 100 lakhs. Okay, next they have given the markup rate is 20%. The markup rate is nothing but the profit, you could say. This is charged by Rohit when he is supplying or providing service to his customer. He is charging a markup of 20%, profit of 20%. This we have to calculate when he is making his invoice value, calculating his invoice value in the second part. Next, they have given the normal scheme rate under GST is 18%. So if you are opting for normal scheme, the GST rate is 18%. That's what they have given. So if we take the total value of input, I said it is not invoice value of input, and we have to calculate invoice value of input. To calculate invoice value of input, first of all, what we need to do is to the total value we have to add GST. But there are certain components that are exempted that we have to exclude first, and the remaining amount we have to add GST. GST at what percentage? When goods are supplied from his supplier to Rohit, who is running a hotel, we can assume that the supplier, Rohit supplier, has registered under normal scheme. In that case, for the services provided by him, he is also liable to pay 18% tax to the government. So he will charge his supplier, Rohit supplier will charge 18% tax on his invoice. Okay, so this is what we need to do first. First, we are calculating invoice value from the point of view of the supplier. So we are calculating GST liability. So let's start our calculation. So they have asked us to calculate GST payable under normal scheme and under composition scheme. So take down the heading as computation of GST liability under normal scheme and composition scheme. Since we are calculating the tax liability under normal scheme and composition scheme simultaneously, we are drawing two columns for the amount. First column is for particulars, where we are writing the details. Second column is normal scheme ka column, which is expressed in rupees, and composition scheme ka column. If you see, we have seen in the question, the values are given in lakhs. So for the ease of calculation, I will be writing the values in lakhs only. So here I will write rupees in lakhs, and after that directly whatever the amount they have given, we can straight away write. They have given 100 lakhs, so straight away I will write 100. Rupees is expressed in lakhs, which means this is in 100 lakhs. The values are in lakhs. Okay. So next what we have to do is, as I said, goods Rohit is purchasing or taking service from his supplier. So we have to calculate invoice value charged by his supplier. In the question they have given total value of inputs, and that is the cost of the input which is given. To the cost we have to add GST to arrive at invoice value of supply or invoice value of input charged by Rohit's supplier. So first we are making calculation from Rohit's supplier's point of view. So I will write supplier to Rohit. So movement of goods or service I am talking about. Supplier to Rohit. Rohit is running a hotel. So supplier's point of view, we are calculating invoice value first. So first we need the cost ka information that is given in the question as total value of input. So I will be writing that total value of input. Total value of input. So that they have given, which is 100 lakhs. Since the value is expressed in lakhs, I will straight away write 100 in case of both the columns, composite and normal scheme. And to this, to arrive at invoice value, we have to add GST. But in the question, they said the value of inputs which they have given, that includes nil rated and exempted supply. So we are charging tax on the nil rated supply, 0% tax is charged, whereas on the exempted supply no tax is charged. So first of all, to charge GST to the total value of input, which is the cost actually, to calculate the GST, from the cost we are adding GST here. From the cost we have to exclude, from the total value of input we have to exclude nil rated and exempted supply, which is 20%. I'll do that first and then we will charge. So first of all, to exclude, from where, what to exclude? From 100 lakh I need to exclude. I need to exclude what? Nil rated and exempted supplies. What is the percentage? 20%. 20% of the cost is nil rated and exempted supply. So that I am excluding here. So now whatever I am getting is the taxable supplies or taxable value or transaction value of input. So on this I have to charge GST, which they have given under normal scheme, it is 18%. We are assuming, because of the lack of information, supplier is following normal scheme and hence 18% GST will be charged by him. So now if you calculate 100 minus 100 into 20%, first you have to do this calculation. 100 into 20%, which is equal to 20. 100 in minus 20, which is equal to 80. So 80 into 18%, this you have to do. 80 into 18%. Use your calculator and find out the value. I use my calculator. to find out the value. So it is 80 into 18 divided by 100, nothing but it will be like 14.4. Yeah, we'll see once again. 80 into 18%, which is equal to 14.4. So tax on excluded amount, that is 80 lakhs, is 14.4 lakh that I have to add. So I'll be writing that 14.4. So this is equal to invoice value of input. So this value is equal to invoice value of input. Invoice value of input. How much? 114.4. 114.4, not 144.4. 114.4 is the value of input. Invoice value of input. Okay. Next, this is from supplier to Rohit. Now Rohit is running a hotel, that means he is providing service to his customer. Now his invoice value we have to calculate on the output. So that is now Rohit to customer. Rohit to customer. Rohit to customer. So first we have to calculate the cost. So we have to find the cost for Rohit in case of normal scheme and composition scheme. So cost of Rohit's input. Okay, cost of input. So when we are calculating tax liability under normal scheme, or previously whatever we have done in the chapters, transaction value, on the transaction value we charge GST, right? So whenever calculating the tax, we exclude GST which is already included. So we take cost exclusive of GST. Since this cost invoice value includes GST, for normal scheme we have to exclude. I'll write in bracket for your information. Excluding GST, cost of input excluding GST in case of which scheme? Normal scheme. So under normal scheme we always take exclusive of GST value when we are calculating the invoice value under normal scheme, whereas composition scheme same as it is, the invoice value straight away we have to take. So here under normal scheme 114.4 is the invoice value of input. From that, if we deduct tax, we will get 100. So that will be the cost of input excluding GST. From 114.4 I am excluding GST of 14.4, so which is equal to 100. Whereas under normal scheme we are not excluding GST, we will be writing the invoice value itself. So therefore it is 114.4. So to this value what we need to do next is, so Rohit once he gets his input, he will add profit to his input or his cost to arrive at his selling price, right? So we have to add profit. In this question they have given it as markup, and markup rate is around 20%. So we have to add the markup to this value. So add markup to the cost. Markup at 20%. So we have to calculate that 100 into 20%, which is equal to 20, right? 100 into 20% is nothing but 20. So 114.4 into 20%, you have to do this. I'll use the calculator. 114.4 into 20%, which is equal to 22.88, nothing but 22,88,000. 22.88, that will be the markup. So we have to add this. So 120, and here it is 137.28. So 137.28 is the selling price, you could say. So this is his value of input, or you can say transaction value. So to this what needs to be added? GST should be added. So we have to add GST, that is in case of normal scheme, because composition dealer cannot charge GST in his input. So as per GST Act, only under normal scheme we have to add GST. So GST at what percentage? At again same percentage, which is 18. So that is 120 into 18%. So 120 into 18%, we have to do that, which is equal to 120 into 18%, 21.6. Yeah, 21.6. So that is the GST. So this, if we add, how much we are getting? So it will be 141.6. Here it is remains as it is 137.28. This is equal to invoice value of output. Invoice value of output. So in the first part of the computation, we have to calculate this value. After calculating this value, we have to calculate GST payable. We can calculate GST payable. So that we are doing next.
In the first part of this illustration, we have calculated the invoice value of output of Mr. Rohit. In the next part of the video, we will be calculating the GST tax liability, and then we are calculating the net outflow or the benefit, and then we will be making the recommendation. So until then, stay tuned, and thank you for watching the video. Kindly subscribe to this channel, Avis Academy. Please like the video and give your feedback on the video in the comment section. Thank you.